We just got our third signal from the Hindenburg Omen. We're going to talk about that and what it means when they start to cluster on today's stock market brief show. We're also going to hop into some of these BP charts, give you some updates there, some of the intermarket charts. And then, of course, we're going to dive into the conditions of the market and the expected moves. We're going to also dive into the weekly expected moves of NVIDIA, Microsoft, and Tesla and show you some of those setups within that space. Let's get into today's show. All right, people, welcome back to the show. This was an interesting chart posted by Subu of the Hindenburg Omen, the signals, and I'm just calling it out over here on the right-hand side when he's just pointing, Subu is pointing out the times where we start to get clusters of signals. And by no means is this a perfect indicator, but if you do look at when they start to cluster, shortly thereafter, we actually run into some volatility time and time again. So it's something to be put in our back pocket and just be made aware of. If you look at the Value Line Geometrics Index today, that was hit 1% today, while the S&P 500 finished up. So you're still seeing this divergence between the Value Line and then also S&P 500. The housing market was down 1% today as well. S&P 500 was up. So you are seeing stuff that typically correlates, not correlate still. And this is also happening while the S&P 500 is a stone's throw away from all-time highs. And being that's the case, you're still seeing some large daily implied moves within the SPYs and the Qs. This is typically something you'd see if you're below the gamma flip line, which we're not, and also not really around all-time highs. So you're starting to see more volatility kind of creep in via these expected moves. If you want these expected moves, I post these on the Discord every single day. You can screenshot this one this time if you want to see them. I just added Bitcoin into the mix, but there's all kinds of benefits that come with this. You buy it through Patreon, you sync your Discord up, and you get access to all those benefits, including the Asher bot and all kinds of cool stuff. So come check it out if you want to see that. It's only 16 bucks a month, or you buy for the year and you get a bigger discount. Let's look at some of the BP charts. So as this is happening, as we're getting kind of a little bit of a pullback in the S&P 500, you do have a bullish divergence forming, in financials at the moment via the bullish percent index chart. The consumer discretionary sector, you got a lower low over here, a higher low over here. So you're also getting a bullish divergence there. The BP COMPQ, so the NASDAQ composite, just moved into an oversold condition as we're pretty much at all-time highs. The NYSE bullish percent index is floating just at about an oversold condition, but you can see here still kind of a bullish divergence forming here as the NYSE pulled back ever so slightly. And you can see the BP SPX chart as well is near that oversold condition while we just pulled back, a few percentage points. Pretty cool stuff. The 10-year yield started to break out today on some of the macro data, hotter than expected data. You do have this bullish divergence that's been forming, and we saw a move up. Now, I think that this move, maybe up to 4.2, maybe in around this area, but I think that this move is going to get faded unless something changes with oil. And the reason why I say that is because look at oil today, down 1.52%. And yeah, some might be able to say this is flagging right here, but it is in a bearish trend overall. And the reason why I say I don't trust this move quite yet on the macro data is because of oil. And when you stack those two together, look at how oil is going down, 10-year yields moving up, and typically oil leads bonds or yields. You can see that, many times on this chart, how they kind of go hand in hand all throughout here, where oil goes down and yield goes down. You have the oil going up, then you're going down, right? So you see this, and even over here, actually, surprisingly, in June, this low in oil started bouncing from this point, and shortly thereafter, the 10-year yield followed. So the divergences or the correlation comes and goes, but overall it holds rather strong. So this means that the TLT obviously got hit, and this is still, we've seen these pretty steep sell-offs in the TLT, or steep moves comparatively to what we've seen, and they typically, resolved higher, at least in this shorter term trend change. So does this mean that we're going to head down lower? Is it going to put in a higher low, which it has been doing, and then eventually a higher high? That may be the case, especially if oil starts to continue to roll over. If you want a cleaner looking chart, we can look at something like ZB, and you can see here the trend line is matching quite well, and we're kind of just pulling back into the higher low. So if this, starts to break, then this story changes dramatically. But as of right now, it's just pulling back. If we take a look at the dollar is creeping up. Today it was down ever so slightly, and we're moving into that seasonal period where you typically do get a little bit of dollar weakness, and we showed that on the prior video. Let's take a look at the market conditions. This is the net gamma. Still traders reaching out to 7,000. Then we have 6,900, 6,950. Oh, sorry, 6,850 over here. And we're actually currently below this. So traders are reaching higher. So you might be able to say that there's really nothing going on over here, which can pose somewhat of a problem. So if I go ahead and overlay those gamma levels on my Thinkorswim chart over here, you can see that we're basically right at about that 6,800. This is the monthly implied move zone for the S&P 500. And we're rather, we're slightly down on the month, rather unchanged overall. And we're still well within a bullish trend. Now, if we can't get above 6,800, this opens the door down to and around that 6,700, which would be kind of the main area to pay attention to from a gamma perspective. So I drew that out over here. If the market were to come off more, that might be where this lower range is, and we'd still be within a bullish trend overall. So that'd be the downside. If we start breaking through 800, I would say 6,900 could be another test, which if we just draw this out, that's where we kind of got a little hung up at. We are still above the gamma flip line, although this is more of a neutral area overall. So if we start breaking to the upside, we'll see volatility come in substantially. And if we start breaking below it, there's a high likelihood of volatility picking back up. Okay, going into tomorrow's trading session, the daily move for the S&P 500 is 68.38, 67.54 to the downside. If we take a look at the direction of the 5-day moving average, it's still red. Well, now it's right across the board overall. So you want price to prove itself, and it just hasn't done so yet for this thing to start to turn back around. So right now it's more of a, sit on your hands, be patient, and wait for things to start to shape up. If we start cracking under this gamma flip line, we could have vol control funds continue to add to selling pressure. If we remain above it and break higher, they can actually help get the market to move in a more positive light, get back above those 5-day moving averages and such. Now, if we do start cracking under the gamma flip line and they become sellers, this could also trigger CTAs to become sellers, and potentially a main trigger would be around that 6,700 area. If that were the case, we can start to see these guys step in to become some bigger sellers, which really helps to that sell side for them bears. If we take a look at the expected moves, weekly expected move was not tagged during the cash market session, but in last night's trading session, we did come down here. In fact, I pulled it up over here. We came down to 670 and 8 cents. And you can see that that was right below, right into this range. Today's daily implied move acted as a level of resistance. We started kind of creeping back up into that area, but we're still below the declining 5-day moving average. So if I update you, this is what tomorrow's daily implied move looks like. 682.13 to the upside, 673 to the downside. And keep an eye on the all-time high anchored volume weighted average price. You can see when we got to these levels, it was rejected quite hard. So if we can make ourselves back up there, you want to see price consolidate. It all matters where price came from to get there. Then you want to see the breakout and this start to turn back around. So as it stands right now, this is the overhead resistance, right? We have our daily implied move, 5-day moving average that's declining. We're below the week-to-date VWAP, and we're below the all-time high VWAP. So the bears can take advantage here, or the bulls are going to step back in and save the day once again. I want to look at the implied moves for the weekly implied moves for some of the bigger market cap names before we sign off here. Microsoft has been kind of a little bit of a rock here, heading the market lower, and this is really dragging the market, right? Microsoft is one of the largest names in the S&P 500, but we are nearing that weekly implied move. We're not too far off, so be aware when Microsoft comes down here, it could potentially start to stabilize for the week, and sometimes if you break below it, you can play trades back up into and around the weekly implied move. Nvidia also got cracked into the close today, 192.29. If we can get down there, that would be Nvidia's weekly implied move. As far as the other big mega cap names, they're pretty much unchanged on the week. They've seen some volatility and so forth, but these two are the larger names in the S&P 500, and they're nearing that lower weekly implied move. The last one I want to finish off here is Tesla. Tesla saw some relative strength today, which definitely helped the market out. So once we started ripping up higher, I put an anchor to VWAP to this level. We haven't tested it yet, and it's kind of in confluence with the week-to-date VWAP. So if we come down into this area, I want to see this continued strength, the 5-day moving average, and they start to break to the upside, and this could, send us higher, maybe to the upper weekly at 489.08. But we're, once again, very close to new all-time highs in the price of Tesla. And this intraday setup, technically beautiful. If you were in the Discord, you saw me post this chart multiple times, but on the 2-minute time frame, and I definitely traded and took advantage of that move in Tesla today. That's all I got for you on today's video. I hope it helps out, gives you some insights. I'll see you on the next.